On Thursday, the European Central Bank, ECB, raised interest rates in the Eurozone for the first time in 11 years, as high and rising inflation becomes central bankers' primary concern. The 50 basis points rate hike is higher than analysts had expected, and marks a departure from the zero interest rate environment the EU has been in since 2016. The general consensus has been that the ECB would raise rates by 25 basis points, but a 50-point hike has in recent days been seen as increasingly likely due to soaring consumer prices in the Eurozone. The Governing Council judged that it is appropriate to take a larger first step on its policy rat. The bank also said that, at the Governing Council's upcoming meetings, further normalization of interest rates will be appropriate. The front-loading today of the exit from negative interest rates allows the Governing Council to make a transition to a meeting-by-meeting approach to interest rate D. For now, the interest rate on the main refinancing operations and the interest rates on the marginal lending facility and the deposit facility will be increased to 0, 50%, 0, 75%, and 0.00%, respectively, with effect from July 27, 2022. Commenting ahead of the rate hike, analysts at Deutsche Bank said in a note to clients cited by CNBC that unpublished inflation expectations data may have made ECB officials worried. As a result, a 50 basis point hike has been on the table recently, they wrote. Moreover, the analysts also pointed to the so-called anti-fragmentation instrument that ECB President Christine Lagarde has been focused on recently, saying a 50-point hike would help in negotiating the details of such a tool. The anti-fragmentation instrument was also pointed to by others, with Dirk Schumacher of financial researcher Natixis writing in a note that Lagarde is likely to stress the temporary nature of such an instrument. She will also underline the ECB's determination to secure the integrity of the M. The design of the anti-fragmentation tool is subject to intense negotiations within the ECB's 25-member Governing Council. The rate hike comes as the Eurozone grapples with its worst inflation ever. Earlier this week, Eurostat published fresh data that showed annual inflation reached 8.6% in June. The ECB's inflation target is 2%.